this LOA, captive model, I know that you talk to people on a regular basis about this. This for me is something that I'm extremely passionate about. I know you are. Once again, we talk about it all the time. But if there's somebody listening in right now and you're somebody who does not own their book of business and you don't have a contract or an agreement in place, if you don't have that in your LOA or your captive, there's, a 3-letter company out there that, they'll bring you in as a total green pea. They'll train you up, show you how to do it. They give you some bunk leads from my understanding. But if you decide to leave, not only will they take your book of business, but they'll also turn around and vector you for all of the advanced balances that you have. Can't caution agents enough if you're getting into this business and you hear this, or if you're already out there doing it, the LOA setup scares the living bejesus out of me for the agents that are out there working their butt off to produce. That's your book of business. You should be in charge of that book. You shouldn't have to look over your shoulder. You talk to so many people who have been wronged on that particular platform. Man, spit it. Tell us how those conversations go in your words on it.
I had this conversation today. You got a contract, right, with your company? And he said, yes. I said, did you read it? He's like, well, it was a year ago, but kind of. And it's like, I always get that answer. I'm like, guys, you're signing a contract. Like, this is the insurance business. We like the business because we can't dance, we can't act, and we can't sing. This is the only other place you can get residual income, right here, insurance, right? So that's why we do it. But if your residual money can be touched, read the contract, right? When you're ready to truly dive into the deep end and be an entrepreneur. But remember these 2 things, okay? This is just the cold-hearted truth. Number 1, do not sign up with an organization that you're not vested day one. That is rule number 1, okay? Yep. What does vesting mean? A lot of people don't know what it means, Chase. I'm like, it means you own your book of business. It means day one, if you write one application and then you hit the lottery and you retire and you get out of the industry, and that policy stays on the books forever, you get your renewals forever. Rule number 2 is do not sign up with an organization that the carrier doesn't pay you. If the IMO pays you, do not sign up with them. So then I'm talking to the person, right? I'm talking to the guy today. He already messed up on rule 1 and 2. And so I basically tell him, look, you have 2 options, in my opinion. 2 options. Option 1, quit yesterday. We can't quit yesterday. It's yesterday. Option 2 is stay there the rest of your life. Because if you don't, and you decide to go there for another year and put on a whole nother $200,000 in premium, you're just going to kiss all that goodbye. What these companies got smart with, Chase, is they started putting 2-year vesting clauses in, right? But then if you look below the 2-year vesting clause, there's like this little asterisk. If you suspiciously mess with our clients, you can be terminated for cause even after the 2 years. And we've seen it. We got a buddy up in the Northeast, and he lost his whole book. He was there 5 years. He was fully vested, never touched a piece of business, never replaced a piece of business, and they still took it from him 3 months after he left. What are you going to do? You're an individual agent. You're going to lawyer up and fight these big, gigantic animals? No, you're not. You're just going to lose in lawyer fees. And it's just sad. It's like this business is so great for everybody involved. 11,000 seniors turning 65 every day. I think you told me the stat. There is not enough insurance agents to help the baby boomers for the next 10 years on their health insurance. There's not enough of us.